Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
How does it feel when you find a main board listed company owning 47% of another main board listed company? Is it confusing? Which one should you buy? The bigger one or the smaller one? This is the dilemma that we face today. Welcome back to Financial Audit on WangHiro, where we guide absolute beginners every step of their way in their investing journey. Salene is a Gen Z who started out only putting her money in fixed deposits. Since joining our series, she has learned the different types of asset classes, how to source for market information, and even open her own brokerage account on Afin Huang. In our last episode of Financial Audit, we guided Salene through the process of analyzing Guess Malaysia for its investing potential. Welcome back to the show, Salene.
Hi.
So how do you feel? It's I think this is the fourth company that we'll be analyzing together, right?
Yeah. Today will be an interesting company.
And the best part is inspiration come from all places, right? Including those closest around us, right, Salene?
Yeah.
John, your dad joke?
Oh yeah. It's literally my stone friend. My stone friend that we're accessing today. So today we're gonna cover Batu Kawan. And for those of you familiar with this company, they actually KLK actually owns associate. It's not even a subsidiary. KLK, Kuala Lumpur Kepong Group, literally owns 47.47% of Batu Kawan.
And that's the other way around.
Oh, the other way, yeah. Batu Kawan owns. Oh, yeah. Sorry. Thank you for correcting me. It's good. Batu Kawan owns 47.47% of KLK, where KLK is more famous than Batu Kawan most of the time. Okay. So, what prompted you to think about or to look at Batu Kawan actually, Salene?
I stay in Penang. The nearest area to me is Batu Kawan.
And that's where all the famous semicon jewels of Penang are based in right now, right? Yeah, the Vitroxes of this world, the Lam Research, yeah.
And so, the seafood.
And the seafood, yes, that's right. That's right. Between there and Tambun, which one is better?
Both have their perks.
Okay, cool. So take us through Batu Kawan. What do they do?
Based on my research, I see Batu Kawan got few activities, business activities. One major is plantation, where they hold 47% of KLK. Then they are into manufacturing, like the chemicals, rubber glove, and pharmaceutical products. Okay. Another one is property development. And
where
surprisingly, their property development is in Australia.
Oh, wow. Interesting. The website even more interesting, Salene. Louis, you will want to see this since this is your cup of tea.
Okay, let's have a look.
Yeah. This is Louis' expertise.
Oh, I see. Okay.
It looks like Trapped in Time, right?
Is that all?
Yeah, I think so.
Okay.
There's no flash coming out.
It's like going to a museum.
Yeah. But they're making billions though.
Yeah. It really goes like the more money. I found this logic around websites. The more money they make, the more their website tends to look like this.
Actually, if you've seen Berkshire Hathaway's one, maybe Salene has not seen this. I've seen this too. I think I've shown this to Louis before.
It's like they didn't need to.
Yeah, correct.
Yeah. No more need to impress anyone.
Yeah, this is Berkshire Hathaway's. Look the look on Salene.
Yeah.
By the way, they have net cash of 190 billion. So they definitely have enough money to make a new website. It's just that like,
whether it's necessary or not lah.
Yeah, right? They don't think it's necessary lah. So this is the website. I think you can code in HTML. You can get this done in 5 minutes.
Yeah, for sure.
Yeah,
but it's the writing that's the hard part.
Oh yes, the letters here. This is actually good source. If you Salene, if you have trouble sleeping, or you want to like really make sure you wake up, either way, it's two ends of the stick. You can actually download letters here. This is what Warren writes to his shareholders every year. So everyone waits for the letters and on this website actually every year. Yeah,
Oh,
interesting, right?
yeah.
Yeah. So in terms of finances, do you think they're profitable even before looking, Salene?
Yeah.
Okay, should be.
Because their website looks like that.
Yeah, because the website looks like that. She's catching on to it. You see, Louis?
Yeah, really, it's true. I found this because I've been studying websites since like I was 20 years old, but more than 10, almost 15 years, and I've really noticed that the more that the company makes money, the more the website is static.
Yeah, static. Trapped in time. They what ain't broken don't need fixing, okay?
Yes, yes.
Okay, revenues. Okay, it's going up. Let's look at profit, net income. Oh, took a dive, I think, this year, last 12 months. Okay, it'll be interesting to find out why. Okay, let's look at the margins. Gross, operating. Come on, net. Where are you? Net. Wow, very thin, 2.6% only,
Oh.
Net margins, quite thin. Yeah, look at that. It's about 4 last year. I think on average 2019, 1.93 only when it was in 2018, their net margins. Actually, even at gross margins level, you're only talking about 12%.
Wow, gross 12%.
Gross is 12%. Can you just imagine? Highest it's been is probably 18%, which is still not that high, I mean, usually if you find high value brand companies, the gross is easily about 70, 80%. Yeah. Software, of course, not a fair comparison, but even apparel companies usually gross is very, very high.
Yeah.
But I think it's because property developer, capex capacity, land banking. Yeah, it's not a fat margin kind of business. Put it this way, Yeah. Let's look at cash flow. Okay, here is where it looks impressive. Okay. So on a profit of 660 million or 1.17 billion in 2022, they had about 2.8 billion in operating cash flow. That's pretty impressive. Even though margins are thin, but it talk about the size. Yeah, just imagine cash flow per year is 2.8 billion, 3 billion.
That's a lot.
That is a lot. Okay. For example, even like Padini only makes like 1.2, 1.3 billion in sales, not even profit a year. Okay. Yeah. Okay. So, yeah. Let's look at the balance sheet. Are they in net cash? Let's see. No, they're not. They're in net debt. Cash is about 3 billion over here. And then long-term debt, total debt. Where is total debt? Somewhere here. Yes, total debt is here. 10 billion. Roughly about 10 billion. Let me plot it out so you can see. So you've got cash and equivalent about 3 billion and then total debt about 10 billion. Why do you think it's that high, Salene?
Because they need to invest in machinery for their plants, fertilizer.
Yeah.
You need like maybe few years for the tree to mature.
Especially for the plantation one.
The biological assets.
Yes. And also this, since they're in developer business, what do they have to buy that consumes a lot of money?
The raw materials and machinery.
One more that is even more expensive than that. Your property developer.
Land.
Correct. Land bank. Yeah. You get stuck. A lot of money gets stuck in land bank. Yeah. Because sometimes you may not buy them cheap. And then when you may not buy them cheap and then the market is soft, you want to develop higher end properties, you don't know whether they can sell. So there's a chicken and egg problem again, you see. Yeah. Property developers, that's the nature of the business.
Very risky.
Yes. So what's the next question?
The next question is their market.
Okay. Who are they serving? Who do you think they serve? So they're in plantations through virtue of owning a KLK. they have property. So who do they serve in these two main businesses?
Palm oil user for plantation.
Mhm.
Their property is Australian.
Australian property owners or
Yeah.
residential owners Okay. No, I'm trying to find a subsidiary, a chart where we have all the subsidiaries.
I don't think you can find inside their website.
Yeah, they got very small. They have found it. Business segments: plantation, manufacturing, property development, investment holding of deposits in licensed bank. Okay, no, this
Oh,
investment
no, you see the business there at the side. There
business.
they got their subsidiaries. You see the
Oh
grey
yeah,
colour,
there.
ha?
KLK PT 1988, what a name, man. Oh, this one even better. Malay Sino Chemical Industrial Sdn Bhd. CSEN Chemical Berhad, chemical companies. Oh, CCM. They own. Oh, it's part of CCM. Okay. Caruso Australia Ventures. Oh, this is the Australia one you're talking about lah.
Yeah.
Okay. So mainly palm oil and property development. So palm oil, I think they have a global market for it because soap, cooking oil. So it's quite a
Most of our consumer products use palm oil.
correct.
So
Procter
they
and
got exports.
Yes. Especially when you're oleochemical manufacturer, everything you can do Surfactants, you see, rubber gloves, parquet flooring, pharmaceutical products, storing bulk liquid. Okay. Property developers, did they? Let me see whether in their annual report do they highlight which is growing and which is not. Let's see. Well, they didn't break it down into segments. Let me see if this one has segments. Okay. Usually in the annual report, Salene, what you can find this thing called revenue segments. So they can tell you like how much is palm oil bringing in, how much is property.
I tried to find it yesterday.
Cannot find, is it?
Very, very hard to
Okay.
find.
Welcome to Malaysia. In the US, it's kind of mandatory you have to disclose. In Malaysia, a lot of companies get away doing that.
But is it mandatory as well here? To this?
I've not read enough to understand whether the rules are that, but public disclosure of all this, it certainly helps investors. So when you don't disclose, what happens is that investors are actually making guesses, educated guesses. Their analogy would be this, Louis. They don't like. Okay, I share with you a personal story of mine. I was an investor in Dialog. I think, do my parents still? Yeah. So my parents' portfolio still has Dialog. Okay. And every time I attend the AGM, they will tell you their business in oil and gas is one third upstream, one third midstream, one third downstream. Okay. Midstream is the storage. Downstream is where they build EPCC tank terminal farms. No, downstream is where they have all the maintenance EPCC work for petrochemical plants and all that kind of thing. But they don't own a refinery, okay. So the reason why they say one third is because upstream, when the price of oil goes up and down, when it's down, they don't make money because prices are low. Midstream, you get a consistent income, but you don't get profits when the oil price is high because you're only paying rental to rent your container terminals. You don't enjoy the volatility of upside of oil. Okay. Downstream, same thing. You contracted out for work. So the reason why they do one third is that at low oil prices or high oil prices, they kind of like buffered, right? So I asked Tan Sri, percentage-wise, has it changed over the years? What is the margins per each segment? He didn't want to review. He terang in a room of 400 over people. He said, why should I review to you? My competitors will know. So until today, even though they've been listed for more than 40 years, he's never. I tried the reverse engineer from the annual report. No way. Certain analysts will tell you, okay, this is their tank terminal. This is how many cubic square meters. This is the rental rate for 2019, 2018. They'll do some reverse modeling. They will not give you precise answers, but it's like kind of like a approximation somewhere there, you see. So the question that you ask is like, is it mandatory? I haven't read the regulation until that detail to know whether it's mandatory. But I know in the US and European countries, this disclosure is standard. In Malaysia, a lot of companies get away with it. get away with it. And it's important for us as investors to know is because let's say you have 3 segments of the business like this. You got Australian property development, you got oleochemical, you got plantation, right? How do I know whether your net margins of like 2% on the low years, is it contributed because property development suffered a loss and had low margins, or was it from the palm oil division, plantation, or was it from, I don't know. So it's like left pocket, right pocket becomes a consolidated number, you see. That's why revenue segmentation for us as investors to analyze is very important. Am I making sense?
Yep.
Yeah. So too bad lah. So you couldn't
I
find it.
mean directly, like someone can just say they don't want to reply you, right? Isn't that?
Yeah, Tan Sri himself.
Yeah.
Tan Sri Ngao himself. Yeah. No, great respect for the man. I understand his logic of, so that his competitors don't divulge. But sometimes the confidence of the investor is actually rooted when the disclosure is better, lah, put it this way. Yeah. The excuse is that upstream they don't operate, but now they operate because they already they bought over the subsidiary. It was used to be an associate stake, then subsidiary, and then now they own 95%. So anyway, back to the question. So addressable market, we kind of established that because of palm oil is big. Now, what's the last question after the market size?
Whether they're cheap or not.
Yes. Okay, let's look at here. Coming back to this, look at valuations, look at competitors first. Wow, one and only? Okay, I guess so. No, because a lot of palm oil plantation players, but mix them up with property development and all that. IOI used to do that, Salene. IOI used to have property because the old plantation was converted into
Property development.
Property development, correct. Sime also, the old, when it comes, in the past, Puchong used to be a palm oil mill, And then today it's like blossom into into a housing estate, a township and all that kind of thing. That's what a lot of palm oil guys do. The more the development come towards the plantation, then they'll convert their plantation land into commercial because it's more profitable. Yeah, and sell property. So in this case, Batu Kawan maybe it's a unique case. They don't add lah. Okay. I would say Sime Darby has their downstream plant. They also have property. Do they spin off the property when we checked it last week? Do you remember?
I think they got one company for property or multiple company for property, and then the rest of the industries that one company. But then some W is having this one.
They spin off already.
The healthcare.
So property they spin off already, I think. Yeah, there integration of property arm of Golden Hope, Kumpulan Guthrie, Sime Darby. So the property is out. The original conglomerate now that we studied was the industrial, healthcare, and the class. Auto. Yeah. So cannot compare. What other companies you can think of? IOI. Let's see whether IOI still has. The properties also spin off already, I think. Okay, this is the property group Berhad, IOI Plantation. So separate lah. Cannot compare also. Now two used to be one. Plantation and palm oil plantation and the property development is one. Now it's like separated lah. Yeah. So I guess we just have to take Batu Kawan at face value lah. Let's look at their valuations. Multiples. Price to earnings. Okay, it's about 13 times. That is, this is price to normalized earnings of next 12 months of forward. Then last 12 months is about anywhere between 7 to 19 times. Wow, quite big difference. You know the difference between forward and trailing, right, Louis? Salene.
Trailing is the past one, right?
Past, correct. So the rolling forward, 4 quarter. Forward is what they try to do is they try to project
Estimate
1 year from now the net earnings or the income, and then they divide. So they say market cap is today's market cap, but next year's profit will be this much, maybe an additional 5%, 10%, depending on what the analysts will try to predict. And then they said forward, if they're growing at like the same rate like last year, You see here, NTM, this is next 12 months.
Mm-hmm.
Okay, and then this one is last 12 months, LTM.
Oh.
Yeah, so forward one, it's actually a projected figure, so you cannot take it at face value because this is what a consensus of analysts say, or
They predicted.
yes,
It's
yes,
just a prediction.
yes, yes. If a tsunami or a COVID or whatever happens, then yeah, it's a castle in the sky kind of thing, lah. But in this case, that time I don't know why they don't have it for 2023 in this case. Yeah, yeah. Yeah, so I normally like to look in between both the forward and as well as the trading, because trading is already done, you've delivered it, right? And then when I see trading, at this valuation, at this growth rate, is the forward too optimistic or not? That means if they, because it will look cheap, the forward PE may look cheap, let's say 10 times, right? But they're assuming that sales and profit grows by 50%. Then I know the assumption is a bit too optimistic. You see, that's why I try to look at a band in between both of them. Yeah. Right. Any questions?
Yeah, I want to see the difference, the graph.
For the graph, is it?
Oh.
So the blue one is next 12 months. The black one is the last 12 months. So if I click all, wow, look at the gap.
Yeah.
This is 8 times, it's 20 times. You'll be interesting to find out why the gap is so big for the next one. Maybe I have a hunch. This was last year when palm oil prices was very high. Remember?
Oh.
Yeah. Crude palm oil prices 2022. So if I drag it to 5 years, you see here, 2022, there was a spike in palm oil prices to above 7,000 per ton, 7,000 US dollars. This is, I think, US dollars per ton, Oh, ringgit, sorry. 7,000 ringgit per ton. So as you can see, these guys here were saying that in 2022, I think they were expecting like these prices to continue, and they predicted that earnings will like continue, but obviously that did not happen, and the
Price went
prices
down.
collapsed. Yeah, can you imagine? From May, April, it was 7,000, and then in July, which is like 2 months, no, 1 month, 2 months, it actually collapsed by half. Can you imagine how fast things actually change overnight?
Yeah.
So good spot. Yeah, thank God I remembered that the crude palm oil prices were like that. So the analysts were probably predicting if we just continue another 3 months, this is how much profit KLK and Batu Kawan will make. But obviously within a month or two, the whole thing changed.
Yeah.
Crazy, right?
Predictable.
Yeah. No, and actually, Louis, they are saying that because this year is El Nino, likely the price will spike again because El Nino dry season, you get less harvest. So supply will be lower. Demand will, if it's continued to be the same with a recovery of China, recovery of Southeast Asia, consumption goes up because palm oil is widely used. Then likely the price will go up again. But truth to be told, it's still like there. Everyone will try to forecast. They take the snowball and then they shake it and then the snowball
Shake.
and then you see. Like that. Lor. Any other questions, Salene?
Yes. Can we compare to KLK?
Can. Valuation, is it?
Yeah.
Okay. Let's look at all. Let's see what color they're going to give us. Come on, wake up. It's quite fast already, actually. Okay. So KLK is in green next 12 months over here. And then, their last 12 months is higher, 19 times. You see here, 19, 20 times, almost 20. Batu Kawan, last 12 months is only 12. So in a way, valuation-wise, Batu Kawan seems to be on average, this 1 year, let's look all. Okay. Batu Kawan seems to be on average cheaper than KLK. On average. Yeah, on average. Let's see, let's drag it here. Some years, KLK, Batu Kawan, yeah, you see, Batu Kawan is always at the bottom. Conglo discount. Because of the property segment, I think, you see. Most of the time, it seems to be like Batu Kawan seems to be on the cheaper side of the valuation. Yeah. Okay. Tools. Any other questions?
Should we invest in Batu Kawan or KLK?
Good question. Can I say neither? Why is okay? I'll share my thoughts and you can share yours. I personally don't like commoditized businesses because you are at the mercy of fluctuation of prices. But your cost is fixed. Your land cost is fixed. Manpower is fixed. Fertilizer costs, not just fixed, increasing. Fertilizer costs. But your prices to sell crude palm oil is at the mercy of the market. The year is good, then 7,000, but on average it's 3,000. Okay. Usually, if in Sarawak, different plantations different, but it ranges anywhere between 2,000 to 2,005 cost per hectare, ringgit. So that means per hectare, the cost for you to rear, to maintain the palm oil is 2 to 2,005 to 2 to 2,005. Okay. But if you're only getting, sorry, not per hectare, per metric ton, your cost to produce is 2,000 to 2,005 ringgit per metric ton. But if you're only making 3,005, and if the cost rises to 3,000, you're only making 500 ringgit difference per ton. So you see where I'm coming from? So you're at your cost is fixed, but you're at the mercy of prices going up and down because it's commoditized. That is the struggle where I don't particularly like. Property market, you have a very big risk. Land bank, you have to buy it up. You don't know whether infrastructure, unless you've got very good connections with the government, the next road is going to be built there. The next industrial park is going to be built there. If you have connections, then you can leverage, you can buy on the cheap. And then when they go up in price because of development, then they benefit and they build. But again, it's a big boys game. It's also very politicky. So it's, again, question mark. That's why I don't like it. What about your thoughts?
I very new to the industry, so I want to know more which type of company we should actually look for. So I'm taking from different, if you notice, I taking from different type of industry just to see how's their market, how's their everything.
Yeah, very smart, very smart. You know what you should do? The next one, try apparel companies.
Yeah.
You let's take it. Lululemon.
Okay. I thought Lululemon is international.
Yeah, nothing wrong, ma. We can get you started on international.
You can do international.
Yeah.
More interesting, I think.
More interesting, then it gives you a different perspective about
Malaysian market and overseas
Malaysian market, international. You can go international, then come back Malaysia and all that kind of thing again. Anyway, it's like what you said lah. Try different industries, open your eyes, then pros and cons. Then you come back, revisit, then you become more mature. You see? Yeah, maybe Louis can also influence her what kind of companies are. But Louis already influencing me for WangHiro's episode last, so it's fine. So this one is all yours, Selene. Whatever stock you want, just go. Even Adidas or while I was like exercising just now, I was listening to Louis Vuitton. Very, very interesting. Very interesting. Yeah, Christian Dior, Tiffany, and yes, Saint Laurent, YSL, used to be part of Louis Vuitton, but now belongs to part of Gucci.
Oh?
Yes. Okay, history, I know I digress, but Christian Dior, Menti, the toe was actually, I can't even pronounce it correctly in French. Saint Laurent. Okay. Saint Laurent was actually the toe or the mentee of Christian Dior. And for 3 years, when Christian Dior actually passed away, Saint Laurent was actually maintaining the brand. The pants, the pants that we wear for ladies today, the ladies' pants, that was the design of Saint Laurent actually. That's why Hillary Clinton's the office pants, that was the original design from Yes Saint actually.
Oh,
They were actually the first to create the ready to wear.
Correct.
Yeah.
Correct.
I
Correct.
was surprised when I learned that as well.
Yeah.
Quite
It's-
historical.
Correct. And then they were making comparisons to Coco Chanel, because Coco
right.
Chanel actually it's a private company today, but they said that the number 5, the perfume number 5, actually makes, like, if I'm not mistaken, if I heard correctly, about 3 to 4 billion a year, just one perfume. Mind blown, right?
It's like the best seller. Yeah.
Yeah. So yeah, then you look at KLK, Batu Kawan. No lah. Every company, every business has its quirks and interests. So it's great that you just study widely, and then when you build your domain knowledge, then you get more familiar. You know what are the things to look at. That makes it colorful lah.
Haven't found any winners for you, right, Salene? You haven't after like 5.
haven't.
Yeah.
Okay, it's good.
One day it will strike out at you, like what Louis said, right? One day when you find, it's okay. Just be patient, grow your knowledge, and then one day, one will like,
Yes,
fall
this
in love
is
with
the
it.
one.
Yeah, this is the one.
Put some emojis around you.
Yeah. Okay, if there's no questions, Louis, come wrap it up.
All right, so that wraps up today's episode of Financial Audit. So now over to you, our audience. Are you like Salene, someone who is thinking of buying your first stock? What do you think of today's analysis of Batu Kawan? Do you agree with it? Do not agree with it? Comment below. If you enjoy content like this, make sure to like, subscribe, and hit the notifications bell. Thanks for tuning in today, and we hope to see you again in our next episode. Bye-bye.